Good afternoon, everyone. Gareth Presch, founder, CEO of the World Health Innovation Summit. I am delighted to welcome you to WHIS 2024 online. This is our final session, our sixth session of the day, future investment opportunities. Personally, I think this is going to be extremely exciting because we've got some real doers, real movers and shakers, shall I say, those who are actually delivering that investment that's needed to make this transformation, and also demonstrating the economic value of health and well-being. Let me just firstly go to Markus just for a short introduction. And Markus, who's joining us from Germany. Markus, you're very welcome.
Thank you very much, Gareth, for having me, and a warm welcome also from my side here from Frankfurt, out of the Deutsche Bank headquarters, the two towers you might be familiar with or not. If not, then you are heartfully invited to come and visit us here in Frankfurt, in the center of Europe and Germany, by the way. So I'm the Chief Investment Officer for ESG Sustainability at Deutsche Bank Private Bank, covering 23 million clients with a private bank, and being responsible for assessing the investments from the economic and investability perspective. But on the side, I'm also the co-chair of Deutsche Bank's Nature Advisory Panel, which advises Deutsche Bank across all three divisions, investment bank, corporate bank, and private bank, in order to take nature into its decision-making processes. And by training, I'm an economist, and I studied Chinese many, many moons ago, and I'm grateful for being with you here to discuss these very important topics from a sustainability perspective. Thank you, Gareth, again for having me.
Thanks, Markus. Let me just go all the way across the oceans, across to California. Holly, thank you very much for joining us. Please, an introduction from yourself, and also, you know, we met a couple of months ago. You've been helping me structure our 5013C in the US. You know, please share, you know, your background with the audience.
Great. Thank you for having me. I love the work you're doing. I'm in Tahoe. It's the holiday week in the US, so Thanksgiving week. So very happy to be joining from the mountains, the cold mountains. I have a career in Wall Street, started at Goldman Sachs doing fixed income derivatives. So very, very capital markets heavy, worked at Morgan Stanley and Bank of America, doing private client work. So working with different assets, and left Morgan Stanley 13 years ago for the sole purpose to be able to include more public-private partnerships, do more work in the private markets. I felt that it was very limited in the bulge bracket firms. And so founded Montcalm 13 years ago, and we have almost all of our assets in impact. We invest in community development and health and wellness and the environment and social equality, etc. And also have devised a very innovative donor advised fund platform, 501c3, to help. Our goal and mission at Montcalm is to keep moving capital into innovative ways, and clients are becoming more and more interested in that. It's really mostly what we offer. So it's amazing to be able to have the success of that and the social impact, and we are pioneers on that at Montcalm and the company that I founded.
Thanks, Holly. And let me go to another pioneer, Nick, who we've met recently at UKSIF. We've been talking about pension funds, particularly around how we could mobilize the health sector's pension funds to support investment in this new area. Nick, a little bit of background about yourself and the work that you've been doing.
Thank you, Gareth, and yeah, thank you very much for inviting me along this afternoon. So in terms of a little bit of background, my experience lies in the traditional asset management world. I spent 10 years working for BlackRock in London, in the Middle East, and ended up in Singapore. As part of that journey, I discovered positive impact investing in 2012. And on returning to the UK, I wanted to invest my workplace pension savings from my time in the UK into those value-aligned areas, so particularly the positive impact investment solution space. And I just found that I couldn't through BlackRock's workplace solution, and when I looked across other workplace providers, that solution wasn't readily available either. And that became a light bulb moment for me in terms of my founding of Pangea in 2021, and that is entirely with a focus on providing a listed, regulated, liquid solution to individuals right across the UK, where it comes to their savings investments and particularly their pension. And we've been doing that over the last 2 years on a personal pension basis through a personal pension wrapper, but we will be rolling out our workplace solution in the UK rolling into 2025.
Thanks, Nick. Now, let me just go to the opportunity here, and I want to bring in Markus initially, because, you know, we need to mobilize capital. And Markus, you know, the question is, how can investors play a role in shifting healthcare towards a preventative and holistic model? Now, I know that's quite a loaded question, and it's a difficult one, because keep in mind that the health system is very risk averse, very similar, I would assume, to financial services. How do we move this capital? And we've had this conversation, you know, on a regular basis. How can we make that happen?
So first and all, we have to distinguish between what is our goal, right? So just reshuffling the flows is maybe not enough, because money goes where the return happens, or where return and investment so means risk taking will be respectively rewarded. And due to the fact that health is a kind of public good, a kind of common, we always have to think in this context about in which parts of this broad topic we have the possibility of the dividability of the costs. So some things won't be financed at all by private investors. Some things will be. And this is something where investors have to be very clear about, where the possibility is to get a reward for giving their money away for supporting a development. So this is a very first important question, and an answer which needs to be given. And there is an interesting area, or two interesting areas, which I want to share with you. And then we really have to be very clear about, again, what I said, that health is a public good, right? So every society needs public health to a certain degree. On the other side, we have now, thanks to technology, the possibility of asset as a service. So companies can provide to dedicated health services the assets which we need for diagnosis based on a kind of lease or rent model, where we really can, in a very meticulous way, make the counting of the usage. So it is not anymore needed that the hospital or doctor buys the entire equipment. It can be rented through the asset as a service model far more effectively than it has been the case before the entire digitization and technology development we've seen so far. And we have also the possibility for artificial intelligence, which is very important, especially when we discuss and think the question of prevention. And this is important given the point number one I have raised, that health is a public good. And given the stretched budgets we are facing all around the world of our governments, there is an innate interest in finding a way of preventing diseases to occur or to materialize, where then AI can be very important for predicting potential diseases, or at least supporting the diagnosis more and more. Just to give you a number, also health inequalities persist, as I said, and they can add further to the challenges and the costs of the sector. And this will be one of the biggest problems in future. So left undressed, the cost of health inequalities could triple to $1 trillion by 2040, or to make it more tangible, these huge numbers, or about $30,000 a year for each person. And this is something which I think is remarkable. And here the integration of AI and machine learning technologies, for instance, can play a key role in addressing these inequalities if providers work to earn patients' trust and ensure that they take steps to mitigate bias within the technology. There is a lot of to do, but I think the solutions are clear and on the table. But we again have to distinguish between what is a goal for which we want to use the capital market in order to get the finance flowing in this direction. And then we have different models like asset as a service. And then on top, we can also use new technologies for prevention like artificial intelligence. And these things are the things we also just have published in our annual outlook, as we expect for 2025 and the years beyond opportunities for healthcare companies, especially in the US and also in Europe. And in the US, the growth supportive measures such as potential tax cuts, as well as regulatory policy easing, keeps our preferences tilt to the sectors benefiting from such an environment. And healthcare is one of these areas where we see potential possibilities in this direction.
Well, thanks, Markus. And let me bring in Royston, who's just joined us. And we did do a round of introductions, Royston. So perhaps you could do a little bit of an introduction, give people a bit of background about the work you've been doing with Rotary and that. And then also, if you wouldn't mind, just touch on the promising areas. Markus mentioned AI. What areas do you feel will open up opportunities for investment in healthcare in the next decade?
Well, thank you for having me. A quick word about CSPOC is a United Nations acknowledged charity or NGO based out of Geneva. It focuses on self-sustaining solutions. We've discovered that by linking health, education, and enterprise together, that's absolutely critical. We need to do all three. And the second thing is that we need to celebrate diversity, equity, and inclusion. That's instead of labeling people, you accept them for who they are. So I was just at the International Labour Organization yesterday, looking at sort of EIGs about employee groups and how you create micro groups of change. And if you can do that effectively, you can create a cascade through an organization. Rotary, well, I'm president of the Rotary Club of Manchester in the UK, which was founded in 1911. So I've been around for about 50 years, which you can probably see. And the Manchester Rotary Club founded the Inner Wheel Club worldwide. It was the first in the world. So we're still very much around service above self. You probably know that Rotary is in 1.4 million Rotarians, 35,000 clubs in 200 countries, with about $1 billion in the foundation. And then the other area is really I'm a sort of member of a family, so we have all sorts of connections all over the place. And Markus will know about off-balance sheet assets. So we're in the process of trying to see what we can do to move some of these off-balance sheet assets into the current account. As you're probably aware that some of them are really quite substantial, so it can affect the Tier 1 ratios. So we're looking at a mechanism to be able to do that. A lot of the families that are involved in that area tend to be very quiet. They don't want to be in the public domain, but there are one family, just when one individual has $50 billion in HSBC. So these are reasonably substantial numbers, and that's one of the smaller accounts. Where we look at innovation, so it's all about making change happen that carries on, rather than change that's just a flash in the pan.
Well, talking about that change, and we have to start somewhere, and I want to just bring in Nick. We talk about the medical profession. It's a huge industry. It's about 10 trillion annually. How can the medical profession better align itself and their pension funds towards positive system change? You're on mute, Nick.
Sorry, Gareth. Yes, I appreciate this will be complicated depending on where you sit in the world. So it's probably easiest for me just to sort of talk to the UK market in terms of an example. And what we tend to find at a high level is a lot of practitioners aren't fully aware of where their pension is invested. Increasingly, this is becoming it's been brought into the spotlight by sort of campaigns, and there's a wonderful campaign in the UK called "Make My Money Matter" that is bringing this to people's attentions. I feel probably this is true right around the world, that pensions tend to operate in a relatively opaque manner, and in 2024 that certainly shouldn't be the case any longer. in terms of positive steps that I feel everyone can take, regardless of domicile or location, just trying to better understand where your pension is investing on your behalf. You are the ultimate owner of those assets, so there's absolutely no reason why you shouldn't be aware of where those investments are being made. And if they're contrary to your values or even your profession, and you could quite safely argue that there will be still a percentage of healthcare pensions that are invested into tobacco companies, for example. So there can be some quite strong conflicts there. I feel that the first step that could be made is to try and put pressure on your existing pension provider to try and ensure that your voice is being heard if you disagree with the way that your pension is being allocated on your behalf. And then if that doesn't work, then just know that you have options in terms of flexibilities in this day and age, and maybe this might require some separate financial advice, but just finding out what those options are in terms of perhaps a different sleeve that exists within the pension that is put in front of you by your provider that actually might be sort of more in line with your values. But failing that, again, that there should be options to opt out of a pension scheme if all of those efforts don't lead to an outcome that you're happy with. And in the UK, as I mentioned, the beauty with the pension system today, and this is very different to perhaps 30 or 40 years ago, we sit in a system that is very flexible, and ultimately you will take control of those assets in their entirety when you reach a retirement age and you decide to draw down on your pension. But there are lots of flexibilities up until that point, and you really do have the power to move those investments much more in line with your values. And just to sort of conclude with an example, this was the problem that I personally faced when I moved back from living in Asia to the UK, and I went through all of these steps, and I couldn't find a solution that aligned with my values, which are very much sort of positive around the environment and around social inequality. And that's not to say that I've moved to a solution that is sacrificing returns. I think, if anything, it could well be the opposite come sort of 20 years down the track when I reach retirement age. So these are very positive steps, and I would say also that there's a huge amount of empowerment that can come from sort of joining this mission with colleagues that you work with, so you don't feel like you're having to take it alone. And again, that can then lead up to much more significant changes at a corporation level. So hopefully that's a useful summary, Gareth.
Thanks a million, because I think this is a really important point here, because when I was a public servant, I didn't even ask where my pension fund was being invested. I had no idea whatsoever. And we are high earners with disposable income within the health sector. Just to give people an idea, in the UK, for example, about 1.7 million workers, but globally that's about 60 million. And I'm sure quite a lot of my colleagues have no idea where their pension fund is being invested. So what I'm hoping we can do here is bridge that sector, that gap, and work with our colleagues so we can mobilize those pension funds towards positive gains like Nick has just described. Holly, you're pioneering this work in the US. You're building that public-private partnerships through Montcalm. Can you just tell us, how important is it to release that liquidity, but then also to bring health innovation to the forefront, because health is wealth?
Oh, there's so many amazing points that everyone's making, and I love, Nick, what you're saying about the pension funds. And I think it's important for the audience to also understand we've got public markets, and public markets have liquidity. And in this day and age, we also have the private markets, and the private markets are becoming more and more accessible because of technology, because we have DocuSigns and emails and different ways to execute in them. I do hope in the future pension funds will start opening up to more private investments. Private investments can lead to more innovation. There's an ability when you create a private investment, which very simply means it's not on a public exchange. I think that's really important for everyone to start understanding. It's in the 30s and 40s and 50s and 60s and 70s and 80s, before we're all old enough to not have computers, we had to have a central system for public markets, because that was the only way that everyone could have accountability and we could understand liquidity. But now, in the day and age of AI and computers, it's been so non-linear in our careers, the ability to use technology to execute, that we now have an incredible open market to create more impact. And the reason we can create more impact in private markets is because we can set different incentive structures. We can have different kinds of capital. We could have short-term loans. We can have long-term venture capital, where we're waiting for a company, from seed stage to do really well. And so for investors, what I'm finding, especially for the ultra high net worth, is once you I think there's this concept of, when you set an amount of capital that's enough, this is going to be different than pension funds and for the general public, but this is where a lot of the wealth and investment is happening on our planet. When there's enough to understand what you need for yourself and your own sustainability, which is what Montcalm works on with clients, then what is the rest of it? And we're starting to really find those that are understanding the power of capital and the power that they can use that capital for. Now, the relationship between risk versus reward, as Nick talked about, I think that that's sacred. We have to have a capital market system that is rewarding investors for taking risk, or else I think the whole thing falls apart. So if you lack liquidity and it's riskier, you should be getting those returns. So that can't fall away, even when it comes to impact. But the understanding of the power of capital and what it can do to create more innovative structures in healthcare, and I'm really finding right now, it's starting to, again, nonlinear. All of a sudden, everywhere around me, there's some really interesting investments in healthcare, where health is wellness. People are understanding that. And people with portfolios want to take some of that capital and move it in an arena that's going to make their lives better, make their children's lives better, but they have to be offered the product. And so it's really important for those of us who are creating that to continue to look at doing that, to find innovative structures that can change the incentives, change the way that, you're not just focused on profit. The public markets are very specific in those bullet points. And then we do also have the whole 501c3 and using capital in a myriad of different ways when you're in the not-for-profit sector. The last thing I'll say that we do a lot in the US, using just our example, is for IRA accounts, which are, not your pension or your 401k, your company, but a company you've left. We do tons of private investments in IRAs, because if you're not touching it in the US until you're 72 and a half, it's a credible opportunity to put investments in non-liquid assets, have time to have it build, and then build an incredible portfolio that's having real impact.
Thanks, Holly. And I'm conscious Markus has to drop off shortly. So I'm going to bring Markus in, because we've got a couple of questions.
I'm so sorry.
Yeah, no problem at all. But Markus, how do we balance, profit and social impacts when investing in the future of healthcare, especially in underserved areas? And I think I also just want to ask you around biodiversity and also the green agenda, because we had a discussion earlier around climate and health. We need to bring those sectors together, because doing, for example, zero emission buses in cities will reduce, air pollution. And then, of course, will stop cancers. We need to be bringing that factored into our investments.
Yeah, so I'm an economist, right? And maybe I'm completely mistaken in what I'm saying now, but I think what you just mentioned, Gareth, these are the obvious things. And humans tend to be able to deal with the obvious things in whatever speed and degree, right? But the obvious things we have on our radar. I rather would focus on the more non-obvious things. And this brings me back to Cali, to COP16. And if I quickly may give here an example, and this is the example of the digital sequence information, which has been agreed on in Cali. The agreement says that companies that use genetic data, including those in the pharmaceutical and agriculture sector, should contribute 1% of their profits or 0.1% of their revenues to the so-called Cali Fund that could stretch into tens of billions of dollars across the sectors implicated. And from this, we can see, firstly, that the sector is fundamentally dependent on an intact natural environment, because pharmaceutical and all the products we need in this health sector, they are coming from nature, right? So we do not create anything without the inspiration, at least, from nature. Secondly, it goes to show how important the social component is, because those who can benefit from an intact natural environment, mostly also the global north, right, are usually not the ones who safeguard nature, which is usually the global south. And thirdly, it shows the importance of a governance framework that includes all stakeholders. So you see that if we broaden now a little bit our scope, and if we get more clarity also around the value chains, so transparency through AI, data, digitization, linking this to the stewards of our natural resources could make even the equitable part in this discussion more viable through such financing mechanisms like the Kali Fund. This is one thing. And the other thing is, and maybe we have forgotten a little bit about this, COVID-19 pandemic, right? Showed how alliances among companies, not-for-profits, academia, and governments can accelerate R&D and manufacturing. So several of the most quickly approved vaccines during the COVID pandemic represented R&D partnerships among research institutes, academia, and industry, including the National Institute of Health and universities like Oxford and companies which names I'm not allowed to mention right now because I'm not talking about single stocks. But this vaccine manufacturing partnerships and the networks grew significantly during the pandemic. More than 70% of the 340 manufacturing and supply chain announcements involved a collaboration among multiple stakeholders. And this shows me also that impact can be achieved through a kind of different thinking, not a complete alien thinking we are not familiar with, but something which we now can prove far better and which we also can finance far better if we think in blended finance terms. So Holly talked about this. We have the private markets, right? And we also in Europe with the new LTIF, we get far more possibilities for non-professional investors. On the other side, we have the governmental finance activities, which we need in the context of the global of the public common, which I mentioned at the beginning. Health is a common. But then there is something maybe in the middle where neither nor can really support. And here we can think about blended finance structures, where also philanthropy can play a role. So we have everything. We just need to make it work, and the main important ingredient for this is information, and let's get the economics right. And if we can get the economics right, we really can achieve a lot. And again, let us not decouple this discussion, as you intended through your question, from the world we are living in and we are dependent on, from nature. And again, this Kali Fund and the digital sequence information discussion in Kali was one of the most important, I think, in this health context. We all should discuss and digest more and more in order to get really a better balance between the question of equality, to design an equitable system, not just for the developed countries, also for the developing countries, which are then in the end the stewards of the natural resources all these health sectors are dependent on.
Absolutely. Thanks, Markus. And I completely agree with you. I'm sure everyone on this, on this session will agree with you. And we do need a paradigm shift. I also think the health sector has to bridge that gap. I think the health sector can do a lot more in terms of our interactions with the financial sector, for example. We really need to build that business model, that business case. Doctors and clinicians are, highly trusted individuals in society, but they also need to step outside their bubble and work with yourself and Holly and Nick and Royston. We all need to work together. We also need to see a shift in mindset. At the moment, it's all about, retrenchment. If you look at the health sector, it's under so much pressure, but there is an opportunity. And you talked about COVID. What was the learnings from COVID? We went out, we met the community, and we engaged, and we built trust, and we actually seen innovation that happened at the local level. Let's not retrench and go back into our hospitals. Let's go out and build communities around health and well-being. Royston, I'd like to bring you in just from the profit and social impact perspective. Where do you see the opportunities for healthcare in investing in future sustainable models? Because prevention, in my mind, has to be the future of healthcare.
Absolutely agree. I mean, prevention is something which starts really at children in school. They learn sometimes very strange models about health. And I always tend to feel that you almost need a driving license for your body, because we tend to ignore a lot of simple things that you can get right. I mean, things like water, food, exercise, meditation, and sleep are key ingredients which stop many people getting into bad health scenarios. And then, of course, it's lifestyle management. We get so many people having difficult lifestyles. So the money is trying to run after fixing problems that are broke. If we can try and find a way where you can actually stop people getting broke, then and I think that's also about loving kindness. That's this business of people coming together and working together as communities. And I think women are incredibly important here, because they're the anchors in the family, and they're also the yardstick by which communities evolve. Where we try and work is, I mean, I can talk to you about technology and all those sorts of things, but we need to really understand better this whole concept of human geography, how people live and work together, how they actually create value. And of course, the money equation is fairly straightforward after that. I mean, I think when even the pension funds are now saying it's not just ROI they're looking at and risk, they're also looking at reputation and resilience. So the Norwegian pension fund, which has about 1.5 trillion in assets, if you talk to Nick Tangen, he's saying, look, we need to be more than just a hole for putting the money. And our pension contributors are asking us questions. What are you doing with the money? And it's more than just the military equation and smoking equations and so on. It's actually about being part of a society, part of the future. In Switzerland, there's the Ethos Foundation, which is 250 pension funds.
Yeah. So just on that point, and we look to the future, and let me just do a last, we've got a few minutes left. I just want to go to each one of you and just look to the future. Holly, can I just get your thoughts on the future of investment? I mean, can you break it down? Because there's be a lot of people watching this from the health sector and from various different sectors, but just simply to people, how do we encourage more investment into health and well-being, for example, and the preventative side of medicine? Do you have any thoughts on how we can bridge the gaps and the future, of course?
Yeah, I think look out for those that understand this. I mean, I think that there's been a lot of us who've been at this for 15, 20 years, and especially the people on this call, which we've been certainly at the bleeding edge of it. What I'm finding now is that more and more people are understanding this, more doctors are understanding this, more financial allocators are understanding this. So if you see someone who gets it, go do a deep dive, figure out, be innovative, and then you can come to Gareth or me and we can help you figure out the product to put to it. That's easy. It's really about finding the demand for it and finding the understanding for it and the education for it. So I think we're going to see, again, an exponential increase in this in the next 5 years, 5 to 10 years. I think both from people understanding the importance of health and wellness and from investors understanding the power of capital and how much they can do to affect change.
Thanks, Holly. And let me just go to Nick. Nick, you're also, we're members of UKSIF, and I mean, they've been sort of pioneering this sort of narrative. Do you think the UK can take the lead on this? Because I think, one of my conversations that I had earlier with a colleague was around, drawing in that blended capital structure and that finance. I mean, if the UK can lead on this, I mean, that would be, that would be a game changer.
Yes, I think there's a huge opportunity, and I was really encouraged when I moved back to the UK in 2016 to discover that in the liquid market space, which I guess is slightly more visible often than the private market space, that actually within the UK there were a number of firms that were really pioneering in my world, this is the impact asset management space. They'd been up and running for 15 or so years at that point in time, so coming up towards 25 years now, and so this is actually a lot more established than you might otherwise assume. I guess the other really strong indicator for me when I think about the UK, if you go to any business school in the UK attached to universities here, and I'm sure this is true right around the world today, when these young, bright individuals are thinking about sort of putting their own mark on the world, they're not just thinking in terms of risk and return. Like, clearly that's important, but equally they're thinking about, well, what is the impact of this? And there's so much innovation that is taking place. There are so many privately owned early to growth stage businesses, and my excitement lies around the opportunity for a number of those companies to, in due course, become household names. Now, they might not do so to a great extent as private businesses, but if some of those businesses list and appear on stock markets and appear in products, particularly in the world that I operate in, that familiarity is going to build. I guess a small proxy might be if you thought about the move to electrification of vehicles. 10, 15 years ago, no one had heard of Tesla. Now, I'm not putting Tesla out there to be a great example, but in terms of that change and how quickly it can occur, I think a lot of us underestimate that. And I think there's going to be huge tailwinds, and this is going to become a lot more relatable to everyone on the street over the next decade.
Royston, this certainly sounds like an opportunity. New household names emerging. We've talked about this in the past. You need honesty, integrity, transparency. I truly believe the future of business will be aligned to societal impact. I mean, will the likes of the Norwegian Pension Fund take notice of this? Will they be the ones that sort of push that agenda forward? Do you see a bright future in this area?
I think the pension funds are always slightly nervous in this area, but remember Nikolai Tangen made about 500 million from his own hedge fund. So he's quite a philanthropist on the side. He just needs to find a space where he can demonstrate that investing in social impact projects have a life. I gave evidence to the pension fund conference in Cancun, and they have to find a home for $30 trillion a year. And we're saying, look, even if you just take 1%, you can actually make a huge impact in the world, and you can actually answer a lot of the question that your subscribers are asking, what do you do with the money? And I think if you can touch people's lives in a positive way and use the money to reinforce, health is probably one of the most important areas. Health and education, should we say, the most important areas that you can possibly make a mark.
Well, look, we've come to the end of this session. Thank you very much for joining us. I just want to say that this is certainly a huge opportunity. You talked about 30 trillion there. That's enormous amounts of capital. But also, let's also not reinvent the wheel. I mean, we have been pioneering a new model, a preventative model of healthcare that works. It's evidence-based. I'm very excited over the next couple of months to develop that even further with our partners, to be able to deploy that solution, give people the tools to manage their own health and well-being, and excited also to develop these new companies. As you mentioned, Nick, there's quite a lot of companies in our ecosystem that we're working, home health, diagnostics at home. These are going to revolutionize healthcare right across the spectrum. So I'm quite excited. We have a sick care health system. We can build a whole new preventative healthcare model. 97% of our budget and above goes on managing disease. Let's pivot that 10 trillion towards, prevention. And let's also look at the value that's created. We demonstrated £1 invested, 36 back. Do the opportunity cost on $10 trillion. That's a lot of jobs we can create. So there's a huge opportunity.
I think we need to be also open-minded. I was asked to go to China to talk about East versus West medicine. And they were saying, look, we're going to use the Cochrane Collaboration Group standards to look at Chinese medicine. And then slightly tongue-in-cheek, they said, after that, we'll have a look at the Western medicine. But, we shouldn't discount other alternative ways of looking at health. I mean, we know that we're only just beginning to understand the human body. In fact, I'm not sure we do understand the human body at all. But, we know that in terms of state of mind, that has an impact of about 40% on clinical outcomes. And yet we ignore it totally in the health paradigm.
I sat on many of those advisory boards in the Department of Health, and there is the thing called the X effect, and we're well aware of it. So it's time to start practicing what we preach. I'm just going to sign off. Just thanks, Holly. Thanks, Nick. Thanks to Markus, who had to drop off, and Royston. I hope you've enjoyed this session. 2024, it's the end of the year. I hope you've enjoyed our sessions today. And just from myself and the team and everyone who's working with us, thank you very much. And we'll talk to you in the new year. Thanks, everyone.
Thank you. Thank you.